everybody. Welcome back to our final video in the trading styles series of videos. This is part 8. Lots of small profits on the shorter time frames. So this is scalping. Lots of crumbs make a meal, as we would say on the trading desk. This is about making lots of small profits on the smaller time frames. And I'm also going to be covering a little bit on momentum trading as well, because momentum trading and scalping really kind of go hand in hand. Momentum trading is just on a slightly longer time frame. So without any further ado, I'm going to jump in and just say a few words about myself. Michael DeGioia. I am a longtime trader. I came right out of New York's Wall Street financial community, started trading on a trading desk at 5 Hanover Square, right off of Wall Street, in the financial district, right across from Goldman Sachs' offices. Started as a day trader, an individual self-directed day trader. Then later on got a job as a market maker and trading desk manager, risk manager. Then moved over to various different firms in New York's financial community. Needless to say, these are the styles of trading that I did. So scalping was one of the first styles of trading that I did as a professional trader. The style of scalping that I did first was actually SOS trading or select net trading. It was basically just using an order out, the select net system, and the SOS system. SOS stood for small order execution system. Select net was where you could select a specific market maker and trade directly with that market maker. And we generally traded 1,000 shares or less. Small order execution system only allowed you to trade 1,000 shares. As a result, I learned to start scalping at a time when the markets weren't even decimalized. We still traded stocks in fractions. At that time, one teeny, okay, 1/16th was $62.50. So it was a fairly big, it was 1/8, one teeny. A teeny was a 16th, an eighth was $125. So it was 1,000 shares, flipping 1,000 shares. You could make significant money, but the commissions were significantly higher. Needless to say, I got a great experience sitting there on the bid, passively waiting to get filled on the bid. Scalping, it really comes from the fact that you have a bid price and an offer price. The bid price is down here, the ask price is down here. And if the fractions were, when the markets were fractionalized, the separation between the bid and the ask was far greater. Today at 1 penny, it's on 1,000 shares, it's $10. You could still make money on a penny, depending on your commission rate and whether you're getting rebates or not. So all of that contributed to this style of trading. It is always a viable style of trading for professional traders to scalp. However, scalping ranges from buying on the bid, selling on the ask, to buying on the bid, selling in the mid price, because if you want to get out, getting out at the middle still makes you money. It's $5 today, but it certainly was more in the past. So scalping is a professional style of traders trading style. Now, certain people are emotionally and personally predisposed to being good scalpers, right? If you're the type of person who feels like they have to be doing something all the time, if you're a little type A and you're ready to do something, you're ready to work, this is your job, you're trading, and you overtrade. Overtrading is a good thing for scalping somewhat. Overtrading, making bad trades is not a good thing, but certainly if you want to trade actively, scalping is certainly a viable style of trading for you. So with all that understood, I'm going to move forward and talk a little bit about the styles of scalping and what go into them. So these are the styles. Scalping style. We have our objective. I'm just going to bring on my laser pointer here. So we have our styles of scalping: objective, size of the move, key factor, risk management. Okay, so styles of scalping: objective, size of the move, key factors, risk management. Momentum scalping, active, okay, at most 20% of your trades. Okay, so momentum scalping is actively buying from the ask and then flipping it a few cents up in the direction of the trend. So you're trying to, when the movement is occurring, we use the movement to take the trade to riskless in the direction of the tape. The direction of the tape, or the direction of the prints. If the prints are going off on the ask, you're waiting for the last level on the ask to deplete. And then you take those last few shares, you grab them, and then you offer them slightly higher. So if this is your bid and your ask, this is the bid, this is the ask, you see the last few shares go, you grab them, and then you offer them out slightly higher. You're usually offering out 1, 2, 3, 4, 5 cents higher than what you just grabbed the last few shares. So you're using the momentum, the direction of the tape to grab some shares. And look, in scalping, size matters. You got to go big. If you can handle it, taking 1,000 share order makes you $10 for a penny, $20 for 2 cents, $30 for 3 cents. 10,000 shares takes $100, $200, $300. And psychologically, you have to be able to handle that kind of size. And the only way you learn to handle that kind of size is by doing it, right? So you have to build up to it slowly, gradually build up to it, and then be able to handle it psychologically, emotionally, etc. Key factors is buy or sell the last few shares off the level, bid and offer in the direction of the move, right? So you're offering out in the direction of the move. You're capturing, you're buying those shares actively, flipping them out. Okay, risk management is get out flat at the worst case. If it starts to go against you, you bought the last few shares, it doesn't go through, boom, punch out for flat at the same level. At worst, you lose a penny or 2 cents at most, right? If it moves fast against you, and sometimes it does. So certainly be aware of that. Straddling, the straddling tactic is when the market's very quiet. After the morning move and before the afternoon breakout, the quiet period of the market, you are scalping or straddling into support and then offering out passively over time. It's a great way to learn the technique, great for flat markets and for narrow range stocks. Playing the range off of the natural movement of the stock. Get shares off the dark pools, midpoints, and flip those shares out against the bid of the offer, collect rebates. Okay, so you're looking to just play the natural movement of the stock. So you have to give the stock a little bit of time, establish a natural movement, and then bid into support, offer into resistance. Routing, testing midpoints, managing your average costs, flipping out shares when it rolls against you. You have to know when to punch out. Play each level, level by level. Manage your average position cost, keep your average position cost near the current market price. So you really have to always be aware of what your average position cost is. That's your inventory. And you always want to be selling at a profit to your inventory. Sometimes you can't. Sometimes you just got to get rid of your inventory, and that means you have to punch out. All right, last, this is the most active style of scalping, right? Which is you're taking and carrying a position. You're not just trying to flip it out for 2 or 3 cents like momentum scalping. You're not just waiting and passively collecting shares, building an inventory, and then selling them out. You are carrying a position while scalping. You know the direction. You're using your technical skills to establish the direction. You are actively getting in, buying on the ask, and then flipping them out, but you're keeping some because you think it's going way higher. Right? So it's ideal for directional markets. Make larger moves by stacking your orders in the level 2 in the direction of the trend. Scalping while going and waiting for bigger moves. It depends on the stock, certainly. So if you're trading a stock that's low priced, obviously you're not going to go for but a few cents. But if you're trading a higher price stock, there's more price movement. The trend direction is key. Placement of your orders is key. Management of your average cost is always important, no matter what style of scalping. You also don't want to get too big, because if you get too big in scalping, you can puke out your position. That's what we used to say on the trading desk. Can average into your position in the direction of the trend, and you can manage your average cost accordingly, but only up to a stop point. If your stop point gets violated, you got to punch out. You got to puke it out, not to use the most unattractive words, but that's what we would say on the trade desk. All right, so let's just go through the scalping and trends, and then I'm going to jump to the charts and just show you a couple of examples of each of these. Now, this is one of my specialties. I flipped around millions of shares a month at some points of my trading career. Certainly, I don't think that scalping is viable in any market, but again, it becomes a necessity when markets prices get lower and markets become tighter. Right now, we're in a very still volatile, very, very high price market. So scalping is not necessary. It's certainly some people still make their living by some of my best students are scalpers and they're still doing great. But just that you can also do other styles of trading with a lot less work, like swing trading, position trading, gap trading, relative strength trading. These styles are fine, and actually the market is conducive to them because the market has been slightly, has had a very, very significant direction for a long period of time. And these styles of trading have certainly yielded good gains as well. But scalping is the style of trading that you can do in any markets, even tight, low-priced ranges. So let's go through scalping in trends. Uptrend, passively bid into pullbacks, actively lift the offer out of pullbacks, replace shares as it goes higher. Passively offer out inventory in the direction of the trend to realize profits. You can average into positions in the direction of the trend to adjust the costs, but only up to a stop point. Downtrend, passively cover inventory in the direction of the trend and realize profits. Passively offer out into strength and actively hit the bid in the direction if it continues to go down and replace your share. So you're hitting the bid on the way down, buying to cover your position, lifting the offer and selling into strength as it goes up. Can average into a position in the direction of the trend, okay? But always have to adjust your average cost, but only up to a stop point. Sideways trend, passively bid into an increased share size down into major support, passively offer out and with increased share size as you get up into major resistance levels. Play each level by level, manage your average position cost, keep your average position cost near the market's current price. I'm going to very quickly just go and show you what this looks like to a certain degree, if I can find some good examples of it. And I'm going to just to bring up, so the best stocks in my opinion to scalp with are stocks that are lower priced. And just to go, okay, so we're going to look at FCX. It's not really that super low price, but certainly a $37 stock. You could see the levels are thick. I'm just going to make sure that this is sharing properly. So I want you to see this is FCX. It's a $37 stock, so 37.76 by 37. Notice that there's a penny spread and the levels are thick. So right now I have a daily chart up. I'm going to put it to a 5-minute. Okay. The direction of this chart is currently down. I'm going to zoom in a little bit just to get us real close to the current day. I'm going to mark my charts as well. Okay. So in this direction, in the current chart that I have up here, we would be scalping down to the low of the day. The trend was down. This was a great scalpable trend. The momentum, the moving averages were indicating down. So I'm going to try to short, okay, put my offers near the moving average. I'm going to go to the 1 minute just so I can get in real quick. Okay, if you notice that here, we're trying to short, right there, you get the little red arrow. The short is in the moving averages, catch that move down. Short, cover, short some more, cover, short some more, cover. You can see that the moving averages are all trending down. So we would be scalping this stock to the short side. And this is a stock that you can see the range, you can see the direction, and you would just be scalping in that direction, offering out near the moving averages, covering when it gets far away. Okay, so certainly shorting it out, cover when it gets far away. This one you could carry the position while scalping because you have a clear trend direction and you can certainly make a few cents. If you notice on this particular stock, you could have shorted it at that arrow, which would have been around 37.85, and you're down about 7 cents, which is a significant amount from as far as the stock goes. This short at the red arrow, even if you got out somewhere near these green bars, so the short near the arrow is at 37.93, cover somewhere around 37.83. So you're making here anywhere from 3 to 5 cents easily, possibly even more. Okay, and there were certainly instances early in the day that you could make more, but that would have been more of like a momentum day trading style. Now I'm just going to bring up another stock. I'm going to bring up Plug Power. This stock has had a fair bit of a run lately, but today it's been fairly flat. So just to look at this stock, the point of control is here at 32. Buying this stock near the low of the day, anywhere around 31.78, and selling it near that congestion around 32. You got literally a 25-cent move. Bid into support, offer into resistance. Very, very clear straddle stock for today, with a couple of decent other scalping opportunities as they go along. So that was a good one as well. Plug Power. Let me bring up another one. BAC. BAC, certainly, a good scalper to the long side. You're looking at a moving average crossover here, right here at at 130, near the price point of $41.60, 41.60. You got a nice move up to 41.68. So you got an 8 cents. Definitely can make 3 cents. Definitely can make 2 cents. Definitely can make 5 cents. Could have even made 8 cents. So that's a significant move on this stock to the long side, just doing a momentum scalp. When you see the moving average cross out over, you're pretty good for a momentum scalp to the long side. Means you lift the offer, sell some at 1 cent, sell some at 2 cents, sell some at 3 cents, you're out. That's the 1, 2, 3 scalp out. So you take the offer, last few shares on the offer, offer out some at a penny, offer some at 2 cents, offer some maybe 3 or 4 cents up. But that's a momentum scalp opportunity. Now, I hope you guys understand scalping as far as it goes. If you're interested in learning more about momentum trading or scalping, this is really one of my specialties. This is how a professional trader survives in any market. To be able to know how to scalp is really to make money in any market condition. It is the most most easily applicable in any market condition style of trading. Whereas in gap trading, you need earnings season. In technical day trading, you need some volatility. In scalping, it's always possible. No matter what the market condition, you have job security as a trader if you know how to scalp and scalp trade successfully. And I will say that some of my most profitable students have been successful scalpers, people that I've taught to scalp successfully. With that being said, the next steps are continuing to learn to trade with me and Dash Trader. Go learningtodaytrade.com. Scroll down to our featured educator session. Look for my picture. Certainly, you could select which type of coaching session. If you're unsure, the best thing for you to do is pay $50 and do a 30-minute free consultation with me, and I'd love to try to help you find out different ways that I can help you make your trading more consistently profitable. Just for the basic information, the more hours you purchase, if you decide to go forward with a coaching session, the more hours you purchase, the better rate you pay. If you want to just do 1 hour, it's $300. If you just want to do that to get started, I'll give you a little bit more. Just mention that you'd watch these videos. Certainly look forward to working with you. I hope that you found that this educational series helpful. Stay tuned for future classes on with more detail into the various different styles of trading, the different patterns of trading, different news events that affect the markets. We have a couple of more series coming out in the near future. I hope you enjoyed this and found it helpful. Subscribe. Hope to see you soon. Trade well, everybody.